So, New England veteran, thank you for tuning in. If you are a veteran out there who's interested in purchasing a home through VA Home Loan, I've got with me a gentleman who knows the business inside and out. So, this is definitely a podcast you want to listen to. Rick Betancourt, thank you so much for joining me.
Thank you very much for having me, Paul.
It's not a problem.
It's really an honor to be here, dude. It's a pretty awesome, sweet setup too, man.
Oh, I appreciate it very much. I really, really appreciate that. You've been in the home loan game for how long now?
I just started my 17th year, and for a majority of those years, is primarily my client base has been active duty and veterans. Work with a lot of PCSing across the U.S., different installation, and just veterans here in Massachusetts.
And so where are you located out of, and what area do you cover?
I am in Danvers, and licensing-wise, I'm good in Mass, Maine, New Hampshire, Florida, Connecticut, and Texas.
And so the information that you'll be sharing with our audience, does it fluctuate greatly from state to state, or is this all like composite across the entire nation?
It's the VA home loan benefit is the benefit itself, and there's no variation from one state to the next. Sometimes you might have different names of properties like a condo or a townhouse or whatnot, but the benefit itself is the benefit.
Okay. To the audience out there, we're going to have a lot of questions. We'll put this out there as a full podcast, but we'll also break it down into segments. So if there's a particular question you're looking for, we'll be able to get that to you efficiently. But more importantly, if you got follow-up questions or any concerns or anything, and you want to get in touch with Rick, down in the description, you can find his contact information. We'll put that there, and please feel free to reach out to him anytime. So, Rick, what is the VA home loan?
So it was created in June 1944, and so actually in this past year it celebrated its 75th year. It was a way to try to help our World War II veterans coming back from overseas fighting to make the dream of home ownership a reality, right? So they created this 75 years ago, and I will admit that there were some times that it was a very difficult type of loan to navigate. It's gone through a variety of different iterations. It's a lot easier than it is today. Primarily, if you meet, and we'll talk about them, but if you meet the character of discharge requirements, term of service, a veteran or active duty personnel, you can go out and buy a single family home or a 4-family home or a 3-family home or a condominium as your primary residence with no down payment. There'll be no private mortgage insurance, which it's what we non-veterans have to pay. I did try enlisting twice, but they wouldn't. I have asthma; they wouldn't let me in. But yeah, so you don't have to pay the private mortgage insurance. Much more favorable credit underwriting guidelines, and the lowest interest rates for any home loan that's out there. So it's really, I think you and I were talking before we came on. It's the top 3. I think it's one of the top 3 benefits that you guys earned. Healthcare when you get out, right? So when you become your veteran, your healthcare. Your post 9/11 GI Bill, which I think is huge. And then I think the VA home loan benefit is a top 3. I think it's just amazing what it can do for you guys.
So you had made mention of what some of the types of homes a veteran can purchase.
Yeah.
It's a condominium, a single family, 2-family, 3-family, 4-family home.
Correct.
Are there other things that can be purchased with a home loan, like an RV or a boat or?
So that's actually a great question. There is the ability to use the VA home loan benefit for a manufactured home. So manufactured homes are double wides, essentially mobile homes, right? However, there's a specific set of rules and regulations that the property must meet, excuse me, before it's allowed to go in the VA sort of portfolio, before you're allowed to put a VA loan on it. So if you had a double wide and it's on a permanent foundation, so it's not going to drive away.
Right.
we put a $160,000 loan next thing you know, the property's gone the next day.
Right.
If it's a permanent foundation, and the big important piece of it is when you have a manufactured home double wide, it is categorized as such through the Registry of Motor Vehicles, right? So before the VA will lend on that or authorize the lending on that, the Registry of Motor Vehicles must give up title, and it must now be taxed as real property within the town. So it's got to be legitimately a home that's being taxed by the city or the municipality. And it is a very good and a very affordable way for a veteran to purchase a home. We see a lot of these in southern New Hampshire, southern Maine, southern Vermont. So nice opportunities.
That's interesting. And so I guess there is a process to establishing a residence. So for instance, someone out there owns this condo plex, right? What do they need to do, or what needs to happen in order for them to be A-OK for approved VA home loans?
I've been working with condominiums associations for a long time. It's actually not that difficult. There's a big rumor that it takes months and years or to get a condo association approved. So let's say it's a 4-family property that's been converted to condos, right? Mm-hmm. We have a checklist. We provide it to the developer. They provide it to us. And free of charge, we will actually submit that to the Veterans Administration Regional Loan Center in Cleveland and get the property approved for VA. And there's only really 2 things that will kind of kick you out of a VA loan, a condo being approved. The veteran population, as a veteran or active duty personnel, they tend to be a little bit more transient. So if you're an active duty personnel, you PCS a lot, you're going to do a duty station here in Boston, duty station down in Texas, or wherever you're going to go.
Right.
So one of the big things for condos is in the master deed, the bylaws, the rules, if there's a leasing restriction, it's a dead deal because that prohibits the veteran from renting their property if they so choose to move out.
That's interesting.
So you cannot have a leasing restriction because that says the veteran must get permission to rent it. Well, if the trustees say, well, we don't want to rent it, now you can't rent it. You run the risk of a foreclosure. If you have a foreclosure, you're going to lose a portion of that VA benefit. So leasing restrictions is a no-no. The other one, which we see very rarely, but it is occasionally inside the rules, it's called first right of refusal. So first right of refusal says, all right, Paul owns a condo in Rick Betancourt Condo Association, and you want to sell it. I have the first right of refusal. I could say to you, nah, I don't want you to sell it to that people. You can't sell it. That's the first right of refusal. That is an automatic no-no as well, too, so that'll deny it. Over the last 10 years, I've helped probably 70-plus condo associations in Southern New Hampshire and Mass get approved. So most of the time, it's not going to be an issue because we review the docs, we'll take a look, take a peek, and if it's not worth submission because there's those restrictions are there, we just won't do it.
So, Rick, with a VA home loan, who qualifies?
So there's a series of requirements that you got to meet. So if you are a veteran and you served 2 consecutive years on active duty, regular military, so regular Army, Navy, Marines, Coastie, Air Force, 2 consecutive years, and you had an honorable discharge or general under honorable conditions, or you were medically discharged, then you would be eligible, okay?
Okay.
If you, during that time, if you served under U.S. Code Title 10 orders, deployment, Operation Inherent Freedom, Gothic Serpent, Inherent Resolve, or something like that, you serve 90 consecutive days, have a honorable or general under honorable conditions or medical discharge under U.S. Title 10, then you're eligible, okay? Active duty. If you've been in the military and you've served 6 months or 181 consecutive days in your active duty, you're allowed to go ahead and buy a house. So you could be, go boot camp. You're in for boot camp for 3 months. You go to AIT or you go to whatever specialization you're going to go to. Once you hit 181 days in active duty, you can then go ahead and apply to purchase a home.
Now, I imagine, sorry to interrupt, but
No.
I imagine that an individual, they can't just go out, if they're an active service member, you can't just go out and buy a home. Like if you're a private first class, and you should be at the barracks, you can't. Is there like an authorization or a memo or something from?
As someone who's not been in the military, who doesn't understand, I don't know the rules and regulations within each branch, but my understanding is that you're not allowed to live off post in some branches until you've been in so many months or so many years.
Right.
Also, I think there's a provision if you get married, you're allowed to move off base or off post, I think.
9 times out of 10. Yeah.
So I'm not an expert in that piece, but I guess if you're a private first class, you're an E1 or an E2, a specialist, and you get hitched and you want to go buy a house, I guess you can. I mean, they're not going to get BAH if they're living on post, but if they go off post, you're going to get your BAH, and that's going to help you that'll help buy a property. So,
And is that already taken into consideration prior to them applying? Because obviously, once they start living off base,
yeah,
they're going to make more money, right?
well, they get the BAH, yeah,
Right.
yeah.
So is that something that they already take into account?
So what I would do is, if the young military personnel is looking to move, we get their order. Well, usually it's not orders on if there's orders if it's a PCS, but if they're moving off base, there's generally authorization to do so, and then we get the authorization, and then we'll find out what zip code they're in, and then we can do a calculation of what their BAH will be,
Okay.
and then figure out if they're going to qualify for the house that they're looking at. So yeah, there's a few extra steps that you have to do. Same thing with we see this a lot with PCS. Not a lot of active bases up here in Massachusetts. I mean, you got Hanscom, and then you have Joint Base Otis, you have Joint Base Westover. But we have a lot of active coasties, Coast Guard bases. So we have Boston, Gloucester. So we'll see I see a lot of New Orleans guys, Coast Guard station down in New Orleans, coming up to Boston or Gloucester. So I'll get a copy of the orders. I know their duty station is going to be either Gloucester or Boston, so I can use that zip code, calculate their BAH, and then I know their pay grade, and I know their term of service, how long they've been in. So with that, or they're married. If they have married, then if you have dependents, then your BAH goes up. So we get that. I mean, active duty personnel, they're the easiest to quantify if they're able to buy a property or not, because
Right.
everything is standardized.
Right. So one of the things, this may be a little in the weeds, but one of the stipulations for VA healthcare is the one that you had just mentioned prior to, that you have consecutive service for X number of months,
Right.
Honorable conditions, and all that kind of stuff. However, that only is applicable to individuals who served after like September something or other back in 1981. Prior to that, a veteran can qualify for VA healthcare if they've had 1 day of service and were discharged honorably. I mean, there were a lot of individuals, say like Vietnam, they went out, did one tour, came back, got out, like they were in for a year, and that's it. So for individuals that are in that circumstance prior to 1981, is there like a different stipulation?
No, because if you were drafted and you went in and you served boots on the ground or under Title 10 orders and you were in Vietnam and you just did 1 year and you got out honorable discharge, you can buy a house. You can use the benefit. I have seen, so sometimes you will also be allowed to have the benefit if it was a force reduction. So if all of a sudden, so there was a veteran that we helped recently in Lynn. He did not serve 2 consecutive years of active duty. He only actually did 18 months active duty. He was discharged after 18 months, but due to a force reduction. So he was forced out. He was able to buy a house because when you look at the DD 214 on the member 4, which is what gives us the character of discharge, the member 1, 2, and 3 doesn't, but the member 4 will. So on the member 4, it also has the notes or the reasons for discharge, and right there it said force reduction. So that, I sent that down to the Certificate of Eligibility Processing Center in Atlanta. I know the girl that runs it, and I said, hey, listen, this is a force reduction. This doesn't seem, she's like, oh, let me look into it. And sure enough, they were able to give him the Certificate of Eligibility because he was clearly a force reduction during it was like mid-'80s or something like that.
Okay. Interesting. And then as far as eligibility goes, is this something, I mean, a service member unfortunately passes away and, you know, the family is there and things are going to be difficult. Is the VA home loan something that's afforded to family members in any capacity?
Only surviving spouses.
Okay.
So if it's a surviving spouse of a veteran or active duty personnel whose passing was directly related to a service connection. So if Gold Stars would automatically have the service, would be able to have the VA benefit conveyed to them. I've worked with a few, half a dozen in the last year or two in Massachusetts. I see a lot of Vietnam veterans who had Agent Orange. They were boots on the ground. They had Agent Orange cancer, 100% disabled when they got back, whatever. They passed due to the connection of the Agent Orange. We were able to convey the spouse benefits over to the spouse, surviving spouse. Obviously, our unfortunate situations where they're killed in action, that goes without saying. But if you're a spouse and your husband, for example, was a veteran and he just had a random heart attack, unfortunately, and passed away, but was not disabled, was not connected to service related, then that's not conveyed over, right? So there's a specific rules and regulations pertaining to surviving spouse and how that works.
So it had to have been an action that happened during military duty that unfortunately took the life of the service member, or they had to have passed due to a service-connected disability.
Correct. Yes. Yeah. That's the big one. And I think if there are spouses that are listening and there's a lot of our Vietnam era veterans who probably had service-connected diseases and just, situations. And
right.
They passed, but they never got rated. I think there's a way to kind of do that. I think you can get adjudicated after the fact. I'm not sure, but I encourage every veteran that's out there. Like, if you have not yet gone to file for a service-connected disability claim, do it and don't wait. I see veterans all the time that come in and they're like, yeah, you know what? I just never got around to it. I'm fine. I have both legs, both arms, both eyes. I'm good. I'm like, okay. I go, why didn't you, I had one guy, he was like, I go, how's your ears? He goes, oh, they ring all the time. I go, oh, no kidding. This is funny. I go, why haven't you? Because there's a thing. If you're a disabled veteran, you don't pay the funding fee. We can get into the weeds on that later on. But, if you apply for a service-connected disability claim before you buy or refinance your home, then you get adjudicated 6 months, 9 months, 10 months later, I can actually get the funding fee refunded for you. As long as, because the approval date is retroactive to the date of submission. So in the eyes of the VA, even though you weren't disabled when you bought your house, you had applied for the service-connected disability, right? So you apply for a service-connected disability in January. You buy your house or refinance in April, whatever it is. All of a sudden, December, you get approved. Come back to me or whatever mortgage professional you use and say, hey, I'm good. I got disabled. In the eyes of the VA, when you bought your house, you were disabled. So I get the award letter. I contact our servicing department and say, start the funding fee refund. And they'll do that to you.
That's bananas. So
this Army reservist comes in and he did 12 years and he never deployed, but he did his 12 years and he had all his qualifying years and AT and all that stuff. And he goes, yeah, I've never filed. I go, all right, how's your ears? Oh, they ring all the time. So I'm like, all right, what was your MOS? And he's like, well, I was Arty. I go, what? He goes, I was artillery. I'm like, 105s or 155s. He goes, oh, no, I used the big ones, the 155s. And I go, so how long were you in? He goes, 12 years. I go, so let me get this straight. You did 12 years in the reserves. You fired big guns 1 week in a month or 2 weeks a year, all the time for 12 years. Your hearing's ringing. Your ear's ringing. You don't think that's related? He goes, oh, yeah. His wife is sitting next to him just going like this. I go, how about do me a favor? Go please apply, and then we'll buy the house. And we can do the both, right? So he goes and applies. He took the time. I go, and I'm just telling you, take a day off of work. Do this, please, for me. He goes, all right. And sure enough, he applies. He went through the DAV. He did his claim, sends it, and then he bought his house in February and March, whatever the hell it was. And sure enough, he got 40%. Come to find out, there was like his earring, it was his hearing, his shoulder from like constantly loading the rounds in. I mean, he had some calcium, whatever it was, and yeah. And now you're a disabled veteran, 40%. He gets his $350 or $400 a month. The funding fee was, the funding fee was refunded to him. He got that. And then Massachusetts General Law, Chapter 59, you have the tax discount. So between 10% and 90%, he got $400 a year off his property taxes.
Oh, because he sat down for a day.
Yeah, just because he wanted to buy a house, and we're out, and I've been working military for a long time. That's why I was asking these questions. I go, listen, a lot of the veterans out there that you don't have that. I think the last, actually it was a year ago, the last draftee finally retired. He was like E9 or something like that. Everyone that's in the military right now enlisted, right? So you guys decided to write the check, go out there and do that. And essentially, with all due respect, you guys became pieces of equipment for the United States of America. I don't know about you, but anything that I've ever bought or acquired, when I got rid of it, wasn't in the same condition when I got it, right? So I'm just saying, most of the time, there's going to be something. I mean, and I'm not saying defraud the system, but I'm saying look hard and fast about what you did and look at your history and how long you were in, and that money's been allocated for you guys. It's there. Just go get it. You're not taking it away from somebody else. Like little Johnny over here is not going to get his service-connected disability because Tommy over here, who never deployed, used it. It doesn't work like that. You know that.
Yeah, no, it's definitely a demand system. I tell veterans all the time that by actually using the VA, you help it grow.
Oh, yeah.
And by it growing, it then enables it to help more veterans. So by you going, whether it's a medical appointment or whatever the case may be, you're not taking away from someone else. You're actually helping the system grow.
100%.
And so, yeah, it's a point of contention, or I shouldn't say contention, but it's a point that I make to veterans all the time. It's like by you using the system, you're helping it. By using a VA home loan, you're helping the VA grow. And because if in 2020 nobody applies for a VA home loan, then Congress can be like, well, I guess we don't need funding for this anymore. So bye-bye VA home loan.
It's absolutely a demand system. And the more that it's used, the better it is. I mean, that example is only one of like maybe a dozen or so, but
I'm sure you got a ton of stories.
Just bananas. I'm like, you were playing with howitzers for how many years? 12 years? Isn't there like a lawsuit or something out there, like about the ear protection you guys?
The 3M thing, yeah.
Whatever. I go, Did you use hearing protection? He's like, oh, all the time. It worked really good. I'm like, your hearing is ringing all the time. It didn't work that good. He's like, all right, I'll go do it. And his wife was just like, thank you for the love of God. I've been she's like, Rick, I've been hammering on this guy for weeks, for months, years to go get checked out. So it worked out good for him.
So for a veteran, veteran or whomever is eligible to use VA home loan, they need a certificate of eligibility. So what is a certificate of eligibility and how do they obtain it?
That's the Willy Wonka golden ticket, right? So that's what gets you a house. Well, that's what allows you. So that's what allows you to qualify to apply for the benefits. So it's kind of like two steps, right? First, as a service person, serviceman or woman, do I have enough of the VA criteria to apply for the home loan? So that's what the certificate of eligibility is. So now, was it 3 or 4 years ago, the ebenefits.va.gov site was all updated, and now you have register your account and all that. You can get it through there, so you can actually order your own certificate of eligibility.
Okay.
So a veteran can do that, right? I will be the first one to say there are a lot of people in my industry that are not so honest and somewhat maybe unscrupulous. And they're like, oh, we'll get the COE for you, but they won't share it with the veteran. They'll just kind of hold on to it as a way to kind of keep them from shopping.
Yeah, it's shady.
Oh, God, let me tell you. Very shady, right? So if you can do it yourself, right?
Okay.
You go on here, there's an ebenefits.va.gov website. There's on the right-hand side, it's like housing or certificate of eligibility. Click that button. I think you plug in your social security number and you hit enter, and it might actually give it to you within seconds, right? A lot of the older veterans, their electronic data is not in there yet, not yet, right?
Right.
So some of the younger guys, like someone like yourself, or that's been in OIF, OEF, and it's since 2003 and on, good chance that your information is going to be electronically available. So you just click order COE, it comes in, they'll email it to you as a PDF and you have it. So about 30% of the time when I work with a veteran, they already have the COE. That's yours. Don't let any lender tell you that it's, oh, we'll get it and we'll hold on to it. We can do the COEs as well. So two ways. The veteran can order it themselves, which I highly recommend. So now you sort of control the transaction a little bit better. It's and this is mine. I'm going to go to lender A, B, C, D, and F and get the best deal, right?
Right.
If you're comfortable with your mortgage professional, then we have a direct portal access. It's called Web LGY or Web Loan Guarantee, where I have both options. I can do the electronic version where I type in your social security number and your date of birth, hit a button, and it pops up. And if you're a younger vet, it's going to show up electronically instantaneously. We get the COE, and I'll send you a copy. Sometimes, about 40% of the time, 30% of the time, your data is not in there electronically, or your reservist National Guard. So then we have to do a full application, and we have to get the 1880 form filled out and send it out. We upload it to Web LGY, and they send it back. Usually it takes like 24 to 48 hours. But certificate of eligibility will tell you that you're eligible to then engage with a lender to apply for the VA home loan.
And so in an instance, you said 30 to 40% of the time you have to do that whole entire application process. What can a veteran expect? Like, is there documentation that they need? Do they need a D214 and all that? Or
yeah, they will. So if I get your information electronically, then I don't really need your DD214 because you would not be eligible for the certificate of eligibility if you had a dishonorable discharge or if you had an OTH that wasn't vetted, essentially, or you didn't have enough term of service, right?
Right.
But if I get that COE, then we're good. If it's not electronically or automatically provided, then I need the member 4 DD214, which shows a character of discharge. And a lot of times veterans are like, well, which one? Yeah, right, because every tour of duty, you guys get a DD214, right? So I've worked with some veterans, they had 6. And they're like, which one do you want? And I'm like, I don't really care. It's
the one that says you at least have a deployment and all that.
Give me one that shows 10 months and has an honorable discharge.
Good deal.
It's pretty cool.
So with VA home loan, how much of a factor does someone's credit score take into account? And I mean, where should somebody be?
So a lot of lenders will tell you that the minimum VA credit score is a 640 or 660 or 620 or 580. The VA loan was created without a minimum credit score. So the Veterans Administration Home Loan Benefit doesn't have a credit score minimum requirement. The VA doesn't lend the money, though. Lenders lend the money. So they are the ones that accept the risk, right? We can talk about how the VA loan guarantee works another time. That's a very kind of deep dive conversation. But when you're talking about credit score, the minimum credit score that some lenders will use is 580. Now, that doesn't mean you're going to get a loan. That means that, okay, we'll consider down to a 580, but there better be some really strong compensating factors as to why you're there, right? Just because you decided not to pay your bills anymore and, I was just kind of, that's not going to work.
They're not going to look fondly on that.
No. But, hey, Rick, my credit score dropped and I had a PTSD trigger. Had some serious issues come up, and there was a period of 12 months that I had a tough time. I was dealing with some mental health issues. And look, here's 12 months, Rick. My credit was terrible, 590. I've always paid my rent on time. I can document that, right? Mm-hmm. One thing I noticed about veterans in my nearly 20 years of doing this, y'all very good at making sure that you pay your rent on time like rock stars. That's the one thing that I notice. I think it's a cultural thing with military, right?
Well, I was doing some reading that it's like the veterans are 25-30% less likely to default on their home loan than like any other demographic in the country.
Oh, yeah. They will. If you wanted to look at stats, the default foreclosure rate for VA home loans across the U.S. is equal to what a conforming non-veteran loan is, like a Fannie Mae, Freddie Mac type loan, okay? Mm-hmm. They're almost identical. So Average down payment for a non-veteran loan is about 20 to 25%, right? Average FICO score, credit score, is about a 780, okay? But there's a 20, those loans don't foreclose generally, right? Now you compare it to a VA loan. In 2019, the average FICO score for a veteran was about a 707, 710, okay? Average down payment for a purchase was 100% financing, no down payment, right? And average liquidity for conforming loans is sometimes up in the 70 to 90,000 range. Average amount of assets, liquidity for a veteran in 2019 was about 21,000. Now that's not a lot of money. It sounds like a lot, but it's not. That's a combination of checking, savings, 401k, TSP, things like that, right? So not a lot of money. So veterans are buying houses with no down payment, no skin in the game, as lenders or some people call it. No private mortgage insurance. Yes, there's a VA guarantee on that, but they don't default. They have a lower FICO score by 80 points. They have less money in the bank, and they're buying houses with no down payment. And one would say that's a worse loan because there's no skin in the game. There's no down payment, lower credit scores, less money in the bank. But those loans don't foreclose and don't default. Same way as non-veteran loans. So when someone argues to me that, oh, gee, Rick, people with down payments, those loans perform better. I call BS on those. It's absolutely not true, especially when you're comparing VA. And I think, it's different to say about Federal Housing Administration, FHA or USDA loans. That's different. Veterans, I think a lot of it has to do with your culture, how you were trained, how you were brought up, just in general, the way that you guys think. You guys were trained to not lose. You guys were trained to win all the time, take care of your family. And I think that shows in the way that the VA loans perform. You guys always pay your bills on time. I mean, you might have 5 repossessions on your credit for car loans, right? But that rent, $2,000, $2,500, $3,000, whatever it is, that rent is always paid on time. And that mortgage is always paid on time. So when we're looking with that credit score type situation to kind of circle back, it's like when you have a 580, 585, don't expect to get a house. But you earned the right to apply for it. So let's look at what do you have? Well, look, I don't have any debt. I've been rebuilding. The reason for my default and my bad credit was I had PTSD. I had surgery that was related to my military service or something to that effect. The story. They call the VA loan a story loan for a reason. It's a story loan because the Veterans Administration does not want to say no to you guys. They want to say yes as often as possible, but you got to give them a reason to say yes. Can't say, I don't know, for 2 years I just didn't want to pay bills. I just didn't like that anymore. Okay, well, I'm not going to give you a $500,000 loan because you just decided not to pay bills. But if, Johnny Jojo, poor veteran, that he might have had TBI, he might have had a PTSD issue. There was a Dear John letter that came, he was deployed and came home to tons of scenarios. But if you've shown, hey, I've been on time the last 9 months, 12 months, and my scores haven't come up, I've saved up a little bit of money, I pay my rent on time, and my work history is good, that's a loan that we'll take a look at. We'll say, all right, can't get you a $350,000 house today. I can find, we can qualify, we can counter and qualify you at 225 because you have all these compensating factors. So most lenders will stop at a 620. There's some lenders that will go down to a 580, but just expect lots of paperwork, lots of explanations, lots of letters of explanation. Be sure to verify your rental history for 24 months. And, it's a bit gnarly, but if you're willing to put the work in, we're willing to put the time into.
So with a car loan, the better credit score you have, the better rate you're going to get. You see it all the time. 0.0% financing and all this other stuff.
Yeah.
Is that the same thing with purchasing a home? Like the better score you have, the better rate you're going to get?
Yeah, you got to be careful, right? So that's where some lenders will, I think, artificially increase the risk thresholds that they have. expect your rate on a VA loan to be higher when you're under that 640, 660 range, all right? 640 really. Rates are sort of categorized with VA on your what we call your FICO score bucket. There's buckets of credit scores. So 580 to 600, 601 to 619 or 620, 621 to 640, 640 to 660, so it goes up by 20. Usually there's going to be variations in your rate when you're under 640. And when you go below 600, it could be substantial. Some lenders will artificially, because they can make money on it, right, will elevate what that risk. So if you're in that 580 to 600 range, absolutely shop your mortgage around. Absolutely. I mean, I'd be going 3 or 4 different lenders and seeing what's out there. If you're a 680 above credit score, there's going to be very, very little variation in rate between a 680 and even a 780. So it's not going to be a huge difference. Loan size does play a factor in all rates for all loan programs. Smaller loan, small the amount of money that a lender is going to make over the lifetime of the loan, the rates tend to be a little bit higher. So if you're looking at getting a VA loan for $150,000 and you have 780 credit score, your rate might be a little bit higher than somebody with a 780 credit score and a $600,000 house, because that's the way the loans. It's the way the loan.
It's more money to be made.
It's the way the loan pricing works. You know what I mean? So it's just you have to do your research. You have to do your due diligence, without a doubt.
And I mean, I'm an individual who checks their credit score every once in a while. Well, actually, I just make sure that someone hasn't stolen my information and open it, because I actually had that happen. Oh, what a nightmare that was. Went furniture shopping on like Amazon, and I didn't find out until 7 months later. But
I hear a lot of veterans. I don't know what it is, but a lot of you guys, you get your ID stolen or identity stolen often. I hear it a lot.
I don't know. I did something wrong. But I mean, there's a lot of ways for a veteran to be able to, or anybody to be able to check their credit. I can either do it through my bank. I can do it through every credit card company now offers it. I could go on to like Credit Karma or something like that. Is the number that I'm looking at, because they vary like greatly, right? Is the number I'm looking at legit, or is there just an entirely different number that you're looking at?
There is. It's 100% different. So without mentioning names, because I'm not allowed to, there's several large online credit notification companies. I would highly recommend you don't use them. There is some credence to the fact that they are collecting data and potentially selling it. Also, there's 8 different credit score algorithms that create your credit or your FICO score, right? There's 8 different FICO algorithms. They call them FICO 1 through FICO 8.
Okay.
FICO 10 is the new one coming out sometime this year. The lending industry uses FICO 4. Okay, so you mentioned credit card. I have a Capital One. They use CreditWise.
Yep.
Okay, Discover, same thing, uses CreditWise. And if you look at the bottom of the CreditWise page on your phone, it'll show you the fine print. In the first 2 or 3 lines, it says, we use FICO 8. Your credit scores may vary from wherever.
Okay.
FICO 4 is an older algorithm. It's more conservative. So therefore, generally, if you have an 800 credit score on a large online credit reporting company that people get to use and access for free, there could be anywhere from a 20 to 60 point variation between that to what we use. Correct. So it is, there's a few companies out there, I don't know who they are, and I can't really endorse them, but there's a few online companies that allow you to pay to get your own credit score, and you can request for a FICO 4.
Okay.
And if you're serious about purchasing a home, I would reach out to those. I would do some research online, talk to some people, talk to a mortgage professional. And if you sign up for those services, then request a FICO 4 credit score, because that'll give you the closest score to what I'm going to get.
Okay.
Generally, auto dealers are going to have a credit score that's a little bit different than what we have. So if you're looking on your phone and CreditWise is giving you a 760, it's going to be a little different. I'll tell you. I refinanced my property in October of 19. And my CreditWise, which was a FICO 8 algorithm, said my credit score was a 797 or whatever it was, 800 or whatever it was. It wasn't always like that, because when I graduated college, I was an all-day train wreck. They're like, dude, you don't even have credit good enough to get a library card. We're not going to give you. It was bad. I mean, that was 22 years ago. So I worked really, as everybody should, work really hard. You know what I mean? And I don't like to say bad credit. Like, nobody has bad credit, guys. Like, if you got a lower FICO score, you've dealt with some stuff, you're all learning. It is what it is. A lot of our military didn't have the financial literacy or the education when they came out of high school, and it's not your fault. Don't blame yourselves. Don't beat yourself up because your scores are lower. You know, it's just slow credit right now. You got to find someone that's going to help you build it. Mm-hmm. But you guys don't have bad credit. Don't ever say you have bad credit. So I actually asked the mortgage guy who took care of my refi, and I go, oh, what was my, everybody goes, whenever I work with a borrower, they're like, oh, what's my credit score? And mine on CreditWise was my Capital One card. It was a 797. But when he sent me the credit report from when I got the refi, it was a 751. 47-point difference. That was me personally. So you will see a variation, definitely, between FICO 8 and FICO 4. So it depends.
So don't be surprised out there if your number's different.
It happens all the time. So it's like, people come to me like, oh, Rick, I finally got it up to like, my online credit place is telling me it's like, I'm a 605. I'm like, ugh. I don't want you to get upset. I'm just telling you right now that when I check it, it's not going to be that. Now, every rare once in a while, it does come back a little higher, but it's not often. It's not common. So I would say ideal credit score for VA is around a 660 plus. It could get a little dicey as you go underneath that, but that does not mean you should not apply.
But that's all indicative of the lender themselves. It's not, as you had said, or if you previously stated, it's not something that's decided by the VA, but by the individual lender. Yeah,
whether they go that low or not, correct. Yeah, we will set, because the VA, what the VA does is the VA says, I'm going to lend Joe, the lender says, I'm going to give Joe a $400,000 VA loan because he qualifies, right? Mm-hmm. The Veterans Administration, what they do is they guarantee 25% of whatever Joe borrows. So in the eyes of the lender,
that's kind of like the mortgage insurance, so to speak.
It's the funding fee, part of it. The Veterans Administration issues a 25% guarantee on whatever the veteran borrows. There's different variations of scenarios, but for the basics. So that means if Joe borrowed $400,000, the lender's only on the hook really risk-wise for 75% of that. So if all of a sudden Joe says, you know what, I'm going to go move to the Amazon and farm coconuts and, and never pay the bill ever again. I'm going to let the house go to foreclosure.
Yeah.
That lender's on the hook for only 75% of what's borrowed. The Veterans Administration Loan Guarantee Division cuts us a check for $100,000, pays off that balance, and then we begin the foreclosure proceedings and do that. So that's why, that veteran lost a small portion or a large portion, depends, of the benefit, but doesn't mean he could never, buy again. He probably could, depends on where he goes. So there's some math to that.
So that actually goes into the next question that I want to ask. And again, I want to remind the audience out there, there's a lot of good content that we're discussing here. This is awesome. This is one of my favorite podcasts I've done so far.
Thanks, man.
Yeah. But if you want to get in touch with Rick, if you got follow-up questions or anything like that, contact information is down in the description. So feel free to jump on down there. We'll have his LinkedIn profile information, business card information, stuff like that. So if you want to get in touch with Rick, some follow-up questions, concerns, or what have you, feel free to reach out to him through the information down in the description.
Yep.
So something that you had mentioned is the ability to reuse or reapply for a VA home loan, even though you've had a foreclosure.
Correct.
But I want to, before we actually get into that, I want to back up a little bit, and that's the fact that you obviously can reuse this benefit.
Yeah. So many rumors, you can use a benefit over and over and over and over and over and over again. So especially if you're a veteran that has a service-connected disability rating, which exempts you from the funding fee, you never pay the funding fee. So if you wanted to buy 50 homes in 50 years, you can go buy a house every year. Buy it, sell it, buy it, sell it, buy it, sell it, and keep using the VA benefit, which is awesome. We could do a whole hour podcast on the funding fee and the different scenarios and how that works. But if you're a non-disabled veteran and you're using your benefit again to buy a house with 100% financing, you have to pay a subsequent use fee, funding fee. It's a little bit more expensive. Instead of the traditional 2.3%, it's now 3.6%. It's never out of pocket. It's financed in a loan. So to give you a rough idea, veteran Bobby bought a $400,000 house, no down payment, he has no disability. His loan amount was $408 and change. 2.3% funding fee was financed into the loan. Okay? About a year or two later, he sells that house and decides, you know what? I'm going to take the profit. I'm going to spend it at Mohegan Sun and put it all in black. And then, but you know what? I lost all the money, but I still want to go buy another house with no down payment. And it's $600,000 in Peabody, Massachusetts, whatever it is. Okay. So when I get the certificate of eligibility, it tells me that you, Joe, the veteran, have used your benefit before. You have full entitlement, but you have to pay a subsequent use fee of 3.6%. So the veteran's like, oh, I don't have 20, 18, whatever that number is, out of pocket. You don't pay it, it's financed into your loan. Oh, that's great. So when this $600,000 loan, that loan amount that he borrows would be the $600,000 for the purchase with no down payment, plus the 3.6 funding fee. So he'd actually have a loan amount of like $621,600.
It's still no PMI.
None. And still some of the lowest interest rates in the world for residential financing. But if you're a disabled veteran, hence previous podcast guys, file for a service-connected disability claim, get your 10% or more, you're exempt from the funding fee. You don't pay it. So sell the house for $400,000, spend all the profit down at Mohegan on roulette, go buy a $600,000 house, no funding fee, same thing.
So I own a property. I used the VA home loan to buy a condo. Mm-hmm. Couldn't afford financially at that point. I just started out my career, whatever. Couldn't afford a single family home or a 2 or 3 or 4 family home, right?
Yeah.
Because you have those options. So I bought a condo, and I don't want to get rid of the condo. I'd rather rent it out.
Yes.
But I need a new primary residence. So what's the deal with that?
So that's kind of like goes into a couple different things. January 1st, you know about HR 299, the Blue Water Navy Act.
Yep.
So thank God our Navy and military personnel who are transporting that stuff over there are finally going to get coverage. Yep. You know, how that works, I don't know. But inside HR 299, the Blue Water Navy Act was a provision that eliminated the VA loan limits. So we have to touch upon this a little bit. So now there are no more VA loan limits for a veteran buying a house, first time, in any state in the U.S. So you literally could go, you could be in San Diego and purchase a $2.5 million home with no down payment, no private mortgage insurance.
What?
Ridiculous rates. Right?
But this is only the first time you purchased, not a second or third.
Not
a subsequent purchase, as you...
Correct. So
right.
So let's talk about, now that's just the tip of the iceberg on how the VA, this new bill works, right? HR 299. Prior to HR 299 coming out, VA loans were associated with loan limits, county loan limits across the U.S., okay? There's 66 counties in the U.S. that are identified as high-cost counties, expensive places to live. There's some places in New York. In Massachusetts, our high-cost counties are Suffolk, Middlesex, Essex, Norfolk, parts of Bristol, and is that it? 5? Yeah, I think that's it. Those are high-cost county loan limits. So what happens is, and there's also 2 high-cost county loan limits in southern New Hampshire, Rockingham and I believe Hillsborough is there. I got to double check that. So you're a veteran and you own a condo. You used a portion of your benefit to buy that particular property, but you don't want to get rid of it. I want to retain that property. It's good rental income. Maybe it's in a college town. You're going to get, X amount per month.
Right.
Plus you're building net worth and you're creating liquidity, and it's all good. So the VA loan limit cap has been removed, but for those that are going to use the subsequent use portion of the VA, use it again, and retain the house that they previously owned that has a VA loan on it, we have to revert back to the county loan limit for Essex County or Middlesex. How much benefit have you used? Entitlement have you used? What is remaining in that county for you, that county loan limit? And then we have to do some math. And then we can figure out.
Interesting. Okay.
Then I can figure out, okay, you're buying a $300,000 single family home in southern New Hampshire.
Yeah.
What would you buy a condo for, Bob? $175,000. Okay. So in my head, I know that veteran probably used on $175,000 purchase, probably used about $40,000 of his entitlement. I know that Essex County, the VA, the county loan limit's about $690,000. So that's about $155,000 in entitlement. You probably could purchase up to about a $470,000 house with no down payment while retaining the condo that you're now going to use as rental.
Huh.
So if you're not working with a mortgage professional that truly understands how entitlement works, and entitlement, it's like a jar. And one of my favorite instructors that I teach with, he used this analogy. The VA entitlement for home loans is like a jar of marbles, okay? And you reach your hand in, you grab a bunch of marbles, and you bought your first house, okay? Those marbles are gone. What's left over in this jar is a combination of the county loan limit and your entitlement that you have remaining. Now, I can keep going to that jar of marbles to buy houses as long as I have reason why I'm vacating to buy a new one. Mm-hmm. PCS, I'm going from Fort Hood, Texas, up to Hanscom Air Force Base, right? Family size getting bigger, moving closer to work, things like that. Moving next door to buy another house with 100% financing, not going to work, right? Remember, VA is only owner occupied. You can't buy second homes or investment properties.
Okay.
You have to occupy it. So you got to prove occupancy. Rick, I want to buy a 2. I had this happen. Rick, this guy owned a 2-family in Lawrence. He's like, I want to buy another 2-family. I'm like, okay, where? Like 4 houses down. I go, no, can't do that. He's like, why? I'm going to live in it. I'm like, yeah, sure. I mean, you're not, there's no way you can prove occupancy that you're going to, why would someone go from a 2-family on street A and go 4 houses up and buy another 2-family with no down payment?
Well, maybe it's closer to work. Yeah.
100 yards, maybe 150 miles. But so the analogy of the jar and the marbles is a really good one. So that helps people understand, like, wow, so you can keep using it. I've had veterans situationally had 3 VA loans on their credit at one time because they transferred from one place to the next.
Interesting. So out of curiosity, I mean, you've got my mind spinning with all different types of questions. We really could talk for hours and hours on this topic.
I teach a CVLS for mortgage professionals across the U.S. I literally teach an 8-hour class on the entire, what we call 26.7-7. That's the VA handbook for loan guarantee. Mm-hmm. That's our Bible for working with you guys.
Right.
I teach a class, it's 8 hours, and people are like, dude, it's got to be 2 days. So there's so much stuff. I know what you're probably, it's like, I want to rip off scenarios for Rick. Like, can I make this work? Can I do that?
So to reference your analogy of the marbles,
Yeah.
right? Say I have a home, I have that condo, right? I want to get into a single family home. What if I refi and I'm not using a VA loan now, right? So I refi my condo
Into a conventional loan.
into a conventional loan.
Yes, sir.
Do the marbles that were being used for that VA loan go back into the jar, or are they gone?
Yes and no.
Okay.
So there is a process, and I got to applaud the VA. They did a great job creating this benefit for you guys because there's a lot of different ways. They're really ultimately, at the end of the day, their goal is to put you guys in homes. When we teach and when we advocate across the U.S., our mission is put more veterans in more homes. Now, not all of you guys are going to buy a house, but those that meet the criteria, you all deserve the right to earn, you're in the right to apply for one. So it may not be 100% successful, but we're going to do our best to get you guys in. So to your example, you own a condo, you're like, you know what? I'm going to refinance into a conventional loan, try to refill that marble jar up to buy another one.
Right.
The entitlement that you used to purchase that house is attached to the house, not just the loan. However, the VA does have a procedure called a one-time entitlement restoration. And what you'll do, and I'm helping a veteran do this right now. He's like, Rick, I got this condo, very similar. And it was a good sized condo, like a $370,000 condo. He would not have enough entitlement to buy the next house with no down payment. He just, good credit, just not a lot of liquidity, right?
Right.
He's like, so how do I do this? I go, okay, first things first, you got to refinance into a conventional loan. I already did that, Rick, we're good. Okay, good. Now, there's a special form that the VA will give you guys to restore your entitlement one time. Okay. So what happens is you refinance, you fill out the VA form, you submit it, they confirm that the VA loan has been paid off, and they do that internally in their system. They will give you a one-time restoration of full entitlement for you to then go buy that $600,000, $700,000, $800,000 home, okay, with no down payment. Here's the catch. You can't do that again. If you try to do that again on another property, the caveat is you have to sell both the condo and the house that you own right now.
Oh, wow.
To get your entitlement fully restored to buy the next one. So that sometimes happens, though, where the veteran's like, I bought this great house in San Diego, Rick, and I'm at the end of my career and I want to retire, and my family and everything, we're moving to Boston, and this is where I'm from, and this is what I want to do. I've been in 26 years. I just don't have enough entitlement.
Right.
Okay, that's fine. Well, and he was like, well, my plan is to eventually sell it, but the market isn't good right now, right? Fine. Here's, you got to refinance it. That's no problem. I can refinance. I owe $300 and it's worth $800,000, whatever. Okay, that's fine. Refinance, conventional, prove it, file the paperwork. Takes about 2 weeks. VA will restore the entitlement. We get the certificate of eligibility confirming full entitlement restored by that property in Boston, PCS or whatever. Just as long as you have enough income to carry both, you're good.
So can restoring entitlement be used if, unfortunately, a veteran defaults on a VA home loan? Mm-hmm. Are they able to restore their entitlement?
Not that way, but you can contact the Regional Loan Center and say, hey, I have a what's called a compromised loss. That's what VA calls it. VA, we try to use words that, foreclosure is such a harsh word. It makes people feel kind of crappy about themselves, but we call it a compromised loss. Okay. So the veteran should have received a letter indicating that what happened, and there's an amount in there. It says, well, you lost $27,000 of entitlement. If you're able to pay that back, if you can physically pay that back, then you can get your entitlement fully restored. So say a veteran had a $200,000 house and their entitlement loss was $48,000, right? Mm-hmm. If they came across some money and were able to pay that back, then they'd get their full entitlement back. They paid back the government the money that was used to pay the lender for the loss, right? But sometimes you don't need to do that. Why would I shell out 50 grand to get my entitlement back when I'm living in a high cost county, Rockingham or Essex, where you have enough entitlement to buy a $420,000 house with no down payment? Am I going to shell out, so there's a math, we have to do some math to see, well, Rick, I'm moving to Florida and it's the house I'm looking to buy is $185,000 and I'm staying down there because I want to raise oranges. Okay, that's fine. Okay, don't pay $40,000 to get your entitlement back when you're going to have enough entitlement remaining to buy the house. So you don't need to. So sometimes there's no need to repay the government the entitlement that you lost. Every rare situation you might. Depends, though, on where you're going and where you're buying and if you're going to be in a high-cost county or you're not going to be in a high-cost county.
So with the new HR, I mean, it's a good thing, but at the same token, in the back of my mind, it seems like you might end up with a lot of situations where people are like, all right, if my first purchase, I can basically go unlimited, and the secondary purchase is based on the actual numbers for the county, then I might as well go big or go home the first time, right? And that's potentially a really dumb decision to
So
make.
if they decide to go big, go home the first time and buy a $950,000 house with no down payment, and then they want to try to buy another house, their entitlement's going to be used up because that's a subsequent use. They're retaining their house that they just bought for $800,000. When under the new HR 299 bill, if a veteran retains a previous resident with the VA loan, we revert back to the old way of calculating entitlement remaining based on the county loan limit. So clearly there wouldn't be enough entitlement left over for them to buy the next house.
Right.
If they were able to refinance, which you have to look at the math, right? If I'm buying an $850,000 two-family in Boston with no down payment, you're not going to be able to refinance that into a conventional loan anytime soon. 15 years, right?
Right.
So they're not going to be able to refinance that into a conventional loan or an FHA loan or whatever other type of loan. They won't be able to do that. So there's some checks and balances in there that are just market driven that it's just you can't do it. So, but I mean, what I like is HR 299 leveled the playing field for you guys. I felt bad when a veteran in Worcester County who did well wanted to buy a $600,000 house, but he had to put a down payment
Because it exceeded
the county loan limit, right?
Yep.
But you go 1 mile east into Middlesex County, because they abut each other, right?
Right.
You go 1 mile east, that same veteran or a veteran, similar income, similar everything else, he doesn't have to put a down payment down because he's in a high-cost county. I thought that was unfair. So this elimination of the VA loan limits on first-time use or full entitlement use, I think it's fair. So if a veteran did well and he's living in Pittsfield, Mass, and he wants to buy because right now the VA loan limit for non-high-cost counties is 510, 400. I think that's the VA loan limit, 510. So veterans in Pittsfield, right? East Oshkosh, Bagosh, wherever it is. Yeah, I'm making good money. I want to buy a $600,000 house. Before January 1st, he couldn't. He'd have to put money down. Probably like 30, 40 grand. And now he doesn't have to. And it's the same for that same person buying in Essex County or Middlesex County. So I thought that was fair. I thought that was a good way to kind of level the playing field. Make them all the same.
So you've kind of touched on this in the previous answer, but so on a first home purchase using a VA home loan, a veteran can expect to, as long as they have appropriate income and everything else, to make a purchase as large as the lender will actually give them.
Correct.
But on subsequent purchases and all that kind of stuff, the threshold for a veteran is what's the range? Like 400 to 600,000, or I mean, just I mean, let's look at a not high cost county and then a high cost county. Like, what could you expect? What would
So
the range be?
a veteran buying a house, so a veteran we're talking about a veteran that currently has an outstanding VA loan, and like what could he buy retaining that compared high cost county, non-high cost county?
Yep.
So, it could be pretty significant because the difference between non-high cost county loan limit, like Worcester County, that Worcester County is $510,400. That's the loan limit for conventional type financing, which is what VA will use. In Essex County, it's $690,100, I think. It's a $190,000 difference.
That's insane.
That's the difference. So not all states are the same
That's
way.
the difference of an actual condo. Like,
So
wow.
if a veteran, that's why a lot of veterans are able to buy more homes. If you're PCSing from like Podunk, like West Virginia, and that's not a high cost county, right? And you bought a house in West Virginia for like 80 grand, but you're moving up to Boston, you can obviously buy a bigger home and you'll have greater ability because the VA loan limit's so much higher. Nantucket, Martha's Vineyard, I think that's Dukes County. That's the other one. That's like 736. Essex
Holy
County is
smokes.
So if a veteran who has an outstanding VA loan in Middlesex County but is moving to a high cost county, Essex, Middlesex, Dukes, Bristol, Norfolk, whatever, they're going to have 35% greater buying power because 510,400 in Worcester, 690 and change in Essex. That's the difference.
So it's definitely easier going from a low cost to a high cost than a high cost to a low cost.
Correct. So
if you're going from a high cost to a low cost,
you could be in problems.
You just want to sell your property and be done with it.
100%, right? Because if you're going, so let's say I'll use a perfect example, Coast Guard, Boston. Guy buys a $650,000 home. No down payment.
Right.
Good, you're done, right? Time to PCS, right? And you're going to go to New Orleans, right? That county loan limit down there is 510,400. You've used all of your entitlement in Boston.
Right.
You're not using your VA loan at all in New Orleans to buy a house down there. You can't. You don't have enough entitlement. That jar is empty. Remember that jar we're talking about?
Right.
That jar is empty. So either A, you sell that house back in Boston and get your entitlement fully restored, or B, if you're able to, refinance that before you leave into a conventional loan and then request a restoration of entitlement when you're ready. So going low count, going normal to high cost is easy. Going high cost to normal, not so easy.
Good information.
Mm-hmm. Yeah.
So every lender, with regard to a VA home loan, every lender that's out there pretty much can do a VA home loan.
Yep.
Right.
Some choose to, some choose not to.
So how do I put this nicely, a PC way? How do you know, or how does a veteran know that they're not getting screwed up? They're not getting the used car salesman pitch from, I mean, what kind of things should a veteran be looking for? Or,
so there's really there's a lot of things I'd love to say right now, but I can't. Shop your mortgage. Do not bite, so to speak, on that very first interaction. All right. I do a lot of lending in different states. So I'm not going to say working with a lender that's online is bad. I'm saying that there are some online lenders that are really, really bad and that don't treat veterans the way that I think that they should be treated. They treat them as a transaction, not as a relationship. Okay? So there's a difference. A veteran, you need to understand one thing. The VA home loan, okay, little secret sauce for you guys. The VA home loan itself is the most profitable loan a lender can originate. Makes them the most money. makes them the most money.
Why is
Well, it has to do with so we've all heard of Fannie Mae,
yeah
Freddie Mac,
yeah
and Ginnie Mae. So Ginnie Mae is what securitizes VA loans, FHA loans, and USDA loans. They're called Ginnie Mae Coupon 1, Ginnie Mae Coupon 2, custom Ginnie Mae coupons, pools, we call them. And they pay the lenders very well because of the federal guarantee that VA issues, a 25% loan guarantee, right?
Mm-hmm.
So lenders can make a lot of money on VA loans. Veterans, unfortunately, a lot of our enlisted personnel, unfortunately, may not have the highest level of financial literacy or understanding when it comes to buying a house, right? So when you have a really profitable product, you have a demographic of consumer who may not know everything that they should know, right, about what it is that they're trying to do, that makes occasionally for an easy target. And so therefore, easy targets, they like to go after you guys. So through online solicitation, if there's any veterans that are watching this, guarantee you, if you have a VA home loan, you've been bombarded with paperwork in the mail about the equity buyout program or access your equity now through the U.S. government's brand new system. They'll even use logos that look like VA. They're not allowed to do that, by the way. So if you get a letter stating that, and it looks like the Veterans Administration seal is on it, do me a favor, take that, crumple it up, put it in the circular file. That is illegal. Can't do that. So veterans are an easily, in my opinion, easily targeted demographic when it comes to VA home loan purchasing, okay, and refinancing. That is the reason why there's been several bills that have changed the VA cash out refinancing guidelines, the VA streamline refinancing guidelines. Those two went through major revisions in 2019 because, pardon my French, of scumbag lenders out there that have been taking advantage of veterans for far too long and systemically and habitually refinancing them every 6 to 9 months. Bang, 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 every time. So all the regulations changed. So what I would say is this: if you're a veteran and you're looking to work and you're looking to get a VA loan, online is gonna be an area that you're gonna be more susceptible to scumbags. Okay, it just doesn't mean you won't find a good one. It just means it's gonna decrease your chances of success. Okay, work with if you can find someone that's local that understands the benefit, right? That's your first choice. That's a good choice. Interview the mortgage professional that you're planning on working with. Like, how long you been in business? How many VA loans you do? If they're like, oh, I do a lot, right? It's, there's a great website you can go to. It's called NMLS Consumer Access. And you can actually look up me as a mortgage professional and see how many lenders I've worked with, how long I've been in the business, what states I'm authorized to originate in. And you can look up my entire history. So if you go online and you interview your loan officer and you're like, oh, how long you been in the business? I've been in a long time. Go to the consumer access page. And if he's only been in the business 2 or 3 years, he's FOS, right?
Yep.
So interview your loan officer, the mortgage professional. How long you been doing VA? What's your experience? Do you charge discount points? Do you charge loan origination fees? Do you have, are you a direct endorsed lender? Do you have the ability to underwrite direct for VA? There's things that you can ask to kind of figure it out, because there's too many mortgage. All right. Massachusetts, only 6.7% of our veterans use their VA home loan benefit.
What?
13.7% nationally.
What?
That's fact.
That's crazy.
Yes. Currently, that doesn't mean that's who's used it historically. That is at this point in time, however many millions of veterans in the U.S., at this moment in time, only 13.7% of the veterans in the U.S. currently have a VA loan outstanding. Fact. Massachusetts has roughly 380,000 veterans plus or minus at any given time. It fluctuates, right? You know that as well as I do.
Yep.
Currently, there's only about 27,000 active VA loans in the Commonwealth of Massachusetts right now. Fact.
That's crazy.
Ballpark. Yeah. So I dovetail into, if somebody goes, oh, I do a ton of VA, you ask any loan officer that, they're all going to say the same thing. But the fact is, no, they don't, because only 6.7% of the veterans are using it. So if everybody says they do a lot, they don't. You have to be very specific about how you interview your mortgage professional on the VA, because there are scenarios that, unless you're experienced with the VA handbook 26-7, chapter 4, chapter 6, chapter 10, if you don't know it, you don't understand it, then you can't create the story for the veteran and you can't get them into a home. It's, yeah.
Interesting.
Yeah, well, I mean, it's a very niche orientated demographic to work with. Okay. If I have a heart problem, I'm not going to go to a primary care physician. I'm going to go to a cardiothoracic surgeon to check my heart. Right. If I got a headache, I'm not going to go check. I'm not going to go to a podiatrist. Let's get my foot checked. Right. There are very, very, very few mortgage professionals in New England that originate VA loans on a regular basis. That I know for a fact. So you guys are forced to do a little bit more work than most when it comes to due diligence wise. There are a lot of big companies that have really cool names. If I could, without saying names, they got really cool names. And a lot of veterans want to go to that because it's like, in my opinion, unfortunately, those situations are just bringing the moth to the flame. So you have to do some research. That's as PC as I can get.
Do your research.
Do your research, yeah. Because it's an incredible benefit. And that's another thing too, is when I train people, I train loan officers, mortgage professionals across the country. I teach them, I go, listen, this is not a loan program. This is not, this is not Fannie Mae or Freddie Mac, which can change the regulation, the rules instantaneously. This isn't a loan program. This is an actual CFR, USC, federal benefit that these men and women earned. So don't treat it like a program. It's not a transaction. So I try to tell loan officers when that are passionate, like I am, about working with military, you're not a loan officer, you're not a loan consultant, you're not whatever, you're a benefit administrator. So treat it as such. And if you do a crappy job, just don't work with veterans. Go work with somebody else.
Go do something else.
Yeah, and I tell them straight up too, and they're like, "No, Rick, it's okay." I'm like, "Okay, we'll see. Yeah, we'll see."
So we've covered a lot of stuff in this podcast. We've covered who qualifies and how to get a certificate of eligibility, and the different ways that a VA loan can be used as far as what it can purchase, and amounts and FICO score and a lot of stuff. What are, beyond all that, good grief, I'm going to have you come back on, man. Beyond all of that, what are some of the, just like quick ones that you can think of, what are some of the myths or misconceptions about VA home loans you run into all the time?
They're not free. Okay, so VA loans are not free. So which means, yes, you can buy it. So no down payment and there's no private mortgage insurance, but nothing in America is free, right? So
you can't even die for free,
right? Can't even. You can't even die for free. No. There are closing costs, settlement charges. You are going to need money to buy a house. Even though there's no down payment, you got to have some money. Now, the nice thing about VA is VA really lets you get the money from any place you want, unlike other loan options. Fannie Mae, Freddie Mac, FHA, those guys have specific regulations on how you get assets to purchase properties for, gifts, not gifts, whatever. Every state is different, the procedure for purchasing a home. Massachusetts, if you're going to buy a house in Massachusetts and use your VA home loan, you can't go to make an offer and say, I have no money. The seller is going to want a deposit from you to take that house off the market, right?
Okay.
You got to have, it's called a good faith deposit. You got to have some skin in the game for that. It's not a down payment. It's a deposit.
It's just to show you're serious.
Yes. Now, I do get a lot of times veterans are like, well, Rick, I have no money. I have nothing in the bank and I want to buy a house. I'm like, okay, we can do that. It's not easy. There's it's easier if you're like, Rick, I got 5,000 to 6,000 saved up, or 7,000 saved up, or I'm going to cash out a 401k. It's only got like 10 grand or something like that. And that gets easier. But there are always closing costs. There are always tax and insurance escrows that we have to collect at closing. So there's going to be a cost to buy a house. So VA loans are not free.
Okay.
So we got to have some money. Now, what's really cool is the VA is like, I've had this happen before. The veteran needed some money to close. He went to the ATM, used his credit. I don't recommend this, by the way, but he did it. He took out a $6,000, $7,000 cash advance against a credit card.
Oh, man.
To pay his closing cost to buy the house. And all we had to do was debt him for what that monthly payment was going to be on the credit card now that he took a $6,000 cash advance, which at 23.9% was probably like $250, right?
That's a lot of money.
But he bought the house. He's like, Rick, I'm going to, whatever. I mean, it worked, right? Don't do that, by the way. It's not a good idea. So you could never do that with a conventional loan or an FHA loan or USDA loan. So you're going to need some money. So you're going to have, I recommend, try to have as close to 10,000 saved up for your deposit, possible settlement charges. If you don't let it dissuade you from trying to buy a house. Come in and talk anyways, because then we can work around like, all right, I can call the seller and be like, listen, this guy is a phenomenal borrower. He's cash strapped. There's ways that we can work around that. But do you want to make it easier? You got to have a deposit. And that's just to take it off the market and show good faith, right? So that's number one. So there's always going to be closing costs and settlement charges. VA loans take a long time. No, they don't. We're going to be closing a couple of these in 27 days. So it doesn't take a long time. If you know what you're doing.
Seriously?
Yeah. No, it's not. It doesn't take a long time. We try to hold everybody accountable. Myself, our team, the real estate professionals, the attorneys, and the veterans. So veteran that does this, Rick, I'll get you everything within 24 hours that you need. Okay, that's fine. Those can close pretty fast. When you have a borrower that is flighty, somewhat all over the place, and you're like, can I have 30 days of pay stubs? Sure, I'll get them to you. And they're from like 2018, that's not going to work, right? It happens. It's a true story. Well, I don't keep my pay stubs. Everything's like direct deposit. I understand that. I need proof. How do I know you still work? Well, I'm there. I mean, I'm there every day, Rick. I understand that. But you throw out your pay stubs and you throw out your bank statements. So what do I have to prove that you work and you have money?
Right.
Right? So if that takes 3 weeks to get, then you're not closing in 21 days or 27 days. That's a 45-day closing. So you're going to hold me accountable to do my job. I'm going to hold you accountable to do your job. So if I give you a list of items again, and it says 2 months bank statement, most recent 30 days of pay stubs, don't give me pay stubs from December, because that doesn't mean anything for me.
Right.
And then you're going to get mad because I'm like, I need updated pay stubs. Oh, I already gave them to them. It's like, we don't like to do that. So, but they don't take long. So they don't take long. This is another podcast, but the property's got to be perfect condition, Rick. And we get this all the time, right? No, it doesn't. The property does not have to be perfect condition.
Yeah, I've had some guys tell me, and I don't know if it's true or not, because sometimes people want to save face and come up with a reason as to why they didn't qualify for something or whatever the case may be. But I mean, I've heard individuals say that, there was a shed on the property and the paint's peeling and like maybe the gutter's hanging down from it. And yes, the shed might not be in the best condition, but the house itself is in great condition. So, I mean, would that actually really stop somebody or keep them from being able to use a VA home loan?
So when the regulation reads yes, the regulation reads yes. So, but here's the thing. The VA appraisal process is designed to protect the veteran and the family. And they look at the 3 S's: safe, sound, sanitary. And they want to make sure that the property meets the minimum property requirement, what we call MPRs for VA, right? Your example, that any structure on the parcel of property has to meet the MPRs. So a shed that has peeling paint could be a problem. But has that ever in my 18 years been a deal breaker? No. And how many sheds have I had that have been problems? Probably about a dozen. So how do we fix it? Well, a couple ways. You could ask the seller just to repaint it. Sometimes they do. Sometimes they won't. Tell the seller, hey, listen, I don't want that shed. Could you knock it down for me? Sure, we can do that. More often than not, the seller's like, I'm not doing anything. We're selling this house as is. That's good. All right. I can't tell you how many times I've had my clients, go out to the house. Now, provided this is after we've figured out everything's fine. There's no income problem, no asset problem, there's no credit problem. They can close. The only issue in this house is that you got a shed where the guy used to raise freaking chickens that's now peeling paint. So we get an indemnification letter from the seller, from our veteran, which means he's not going to sue anybody. Veteran goes out there on a Saturday, sand, scrape, repaint, appraiser comes back, we're good to go, we close. Fine. So the veteran can take care of any repairs on the property that he or she sees fit to repair themselves. Not a big deal. So it's not, I've done that for fences, I've done that for sheds, I've done that for decks. Usually if there's a safety issue, like a missing handrail, that's the seller will take care of that. In New England, in my experience, the biggest issues that veterans will run into when purchasing a home, New England's old homes, right?
Yeah.
It's where America started.
Right.
Right? Revolution's here, the Plymouth Rock's here. Just in Danvers, Mass alone, we have, I think, 15 first period homes. It's like 1600s.
Right.
So we have old homes. So there's a lot of peeling paint occasionally. And there's homes where they have staircases that don't have hand railings. Just put them on. Piece of cake. Not a big deal. I have only had one property in the last 5 years that just would not qualify. And the seller wouldn't pay for it, and it was just too much work for the veteran to fix it up. Had like a roof was sagging and it looked bad. And
Yeah.
And the guy's like, the roofer came out and he's like, I gotta be honest. He's like, this whole thing's got to come off. And the veteran's like, I don't want to do that. But that was picked up by the appraiser. But it doesn't happen often. So if you're a veteran out there, don't freak out. They think you have to buy new construction or a brand new home or whatever. We financed a house one time. It was an old 1965 Cape, and literally the kitchen had not been updated. It was old, like pink tiles and green floor and, horrible cabinets and whatever. And it was fine. It's functional. So it's okay. It's just, it's old.
It's sound, it's safe, it's
sanitary. Yeah. If you've got a private well, you got to do a well test. Make sure the water, but why would you not, right? If you got...
Yeah, I'd want to make sure my drinking water's good.
Just want to make sure the water's okay and it doesn't have loaded with E. coli or fecal coliform or gas because there's an upgraded gas station or something like that. So you don't have to worry about, appraisals are not... It's something that we have to just cross that road when we get to it, but it's going to be not a deal breaker most of the time. Sellers have a hard time accepting VA. because of rumors. So, you know, but what most veterans don't know, Massachusetts General Law, Chapter 151B, Section 7, you guys are a protected class. So it is illegal in the Commonwealth of Massachusetts and 5 other states to discriminate against a veteran on the sale, lease, or purchase of a property. Can't do that. And I've used that.
Interesting.
I had a 2018, had a seller say, we're not accepting this offer. I go, why not? It's VA. So, well, we had a bad experience last year. So we're not accepting any veterans, any VA offers. You can't do that. Yes, we can. So I politely sent over the Massachusetts regulation, the MGL, sent it over there. That's only for disabled veterans. No, it's not. We're still not accepting the offer. Okay. So I called up the real estate professional. I said, so here's what's going to happen. I go, either A, you accept the offer and we move on and we close for this veteran, or B, I file an MCAD violation against you and your seller. And I had a consumer protection attorney agree to file a lis pendens on the house to tie it up in litigation so they would never sell it. And then I will actually file to have your license removed under a discrimination violation with the Massachusetts Association of Realtors. We closed 30 days later. It's good. It doesn't mean a seller has to accept a veteran's offer. That's not what I'm saying.
It's just that you can't discriminate against them for.
And this was in writing. The seller said in writing, no VA offers allowed. And because veterans are the only ones to get the VA, it's a litigatable offense based on my conversation with the consumer protection attorney, that denial of a VA benefit directly discriminates a veteran, because that loan option is only available to you.
But that is not to be confused with a property that does not qualify for a VA home.
That's correct. That's right. So, I mean, if it doesn't qualify, it doesn't qualify. And the seller does not have to, under any pretense whatsoever, bring that property up to code in any way, shape, or form. It's simply the factual raw discrimination of saying, I've got a veteran, highest best offer, no other offers, you know, whatever it is, and I'm just not going to take it because it's VA. That's what I'm talking about. And we run into those once or twice a year. And it's like I said, when we show them the regulation, that's it. There's 5 other states that have veterans as a protected class, which is really awesome. So, I mean, there's a few other things that can't buy condos, or, you know, we had talked about that, but, you know, condos don't take 90 days or 120 days to get approved. So you'll hear that a lot. So if a lender's, so this is one way you, as a veteran, you can kind of vet your lender. If the lender's like, oh, don't buy the condo, it's going to take 6 months to get it approved, walk away. Just turn around, walk out, call it a day, put a flag and, you know, pin that one flag, not go see that person ever again.
Right.
We just got a condo approved 11 business days.
That's a proactive group of people, both buyer and seller.
Yeah, you know, the seller, we knew the condo association. We reached out. They were very proactive and got us the stuff that we needed very quickly. Our team got it in very quickly, and Cleveland Regional Loan Center approved it very quickly. So, on average, is it 10 business days? No, it's usually about 14 to 15 business days. You're looking at like 2.5 weeks, but it's not 6 months. It's not 90 days. You know what I mean? So, condos are a great, affordable opportunity for veterans, and I highly recommend that they do not limit their search to just VA-approved condos, especially when you're working with professionals that know how to approve those loans or approve those properties. So there's a lot of wiggle room in there too. Veterans, what's another one that's a big myth out there? The seller has to pay the pest inspection. That's a good one. Yeah. So you get this a lot. This is part of the reason why they don't want to accept the offer. If you have a lender that says, oh, the seller must pay the pest inspection, just walk away. Just go someplace else. That regulation was changed in May of 2014. And by the way, the regulation never read that the seller had to pay for it. The regulation used to say only the veteran was not allowed to pay for the pest inspection. Somehow common law, whatever, real estate industry decides to make it like the seller had to pay for it. So that was changed 5 years ago, say almost 6 years ago now.
So there's a lot of myths out there. Dude, I'm going to definitely have to have you come back on. We've covered a lot of great information.
Yeah.
I really appreciate it. I appreciate what you're doing to, help out the veterans that are doing this probably for the first time in their life, purchasing the largest purchase they'll ever make, and keeping them on the straight and narrow, make sure they're not getting...
For me, as someone that comes from a real patriotic family, and I get really emotional sometimes talking when I teach in front of people about why I do what I do. And I'll tell you, for those, if there's a mortgage professional watching this or a real estate agent that watches this, I firmly believe in my heart, this is one of the few ways that we can actually give back to our military and help repay an unrepayable debt, right? I don't think there's any other way I could repay a veteran for their service, combat, non-combat, air, whatever it was. I'm helping them use their benefit.
Right.
It's the best way for me to give back and say thank you and do it right and provide information and guidance and impartiality. And so for me, it's just awesome.
Well, Rick, thank you so much for being on the podcast.
Oh man, it's great, bro.
Definitely have you back. We can get in the weeds on a couple of different things.
Yeah, we did a lot of stuff. We can kind of deeper dive on things, and we could, maybe some podcasts pick one thing like, hey, let's talk about 30 minutes, Rick, about this, right? And do some flow charts or whatever.
All right, man. Well, I appreciate it.
Thanks, brother.
And to all you guys out there, if you're looking for information, if you want to get in touch with Rick, ask him some questions that maybe we didn't cover during this podcast. Again, his information is down in the description. Feel free to reach out to him via email or LinkedIn or whatever the case may be. All that info will be there. Rick, thank you. To the audience, thank you.
Thank you, everybody, for everything. I appreciate it. Yeah, man.
We'll see you guys in the next podcast.